We are live. Hi, everyone. Thank you so much for tuning in. I'm Jen, your host of Blockchain Banter. We are here for another episode of Trading Crypto, Learn from the Pros. I've got Dr. Mark Richardson here, project lead at Bancor and Carbon DeFi, along with Keith Allen, co-founder of Material Indicators, TA and algo trader, and order book analyst. Crypto Corio is going to be joining us a little bit later on.
He better.
He'll be here. He'll be here. Normally, we kind of just jump right in, right? We kind of talk about what you're seeing, Keith, in the order book. And before we do all of that, I kind of want to just ask you guys in general, what are you like? How are you feeling about the market right now without looking at the order book, without looking at any of the liquidity, right? What's your general take or feel on where we're at the moment?
Is you want to take that first, Mark, or you want me to go?
I'll let you take it first.
You just sit there and look cool, dude. Well, I can't unsee the order book, but I cannot speak to that at the moment. And a big week, obviously, this week. We had Fed Chair Powell speaking today. We had economic data today. We have more data, more economic. And when I say economic data, like the key metrics that Fed watchers are watching coming out today, tomorrow, and Thursday. And the market is, waiting for some good news. The market is waiting for some good news that would serve as a catalyst to this, right? We've been in this range, in a very wide range for a long time. We have a high up at almost 74K. We have a new local low down at 56.5. And the market's waiting to see what's going to happen. Everybody anticipates this post-halving next leg up. And, I think that still is on the horizon, but nobody really has a real gauge on the timeline. Like, when does it happen? In fact, there was a thread, Cointelegraph put a thread out over the weekend, which we got a nice mention in. That
you guys did Material Indicators?
What's that?
Who did?
Yeah, they posted one of my tweets. Reposted.
That's very cool. They've been amazing, by the way.
Thank you.
This. I give you shout outs on your tweets, but
I appreciate that. I do appreciate that. So their question was like, typically, I think they said something to the effect of, typically there's a 3-week lull after the halving, and when do you think the next, what do you think the next move is? And I, we had talked extensively on these live streams about, the dips and the consolidation periods that happen around halvings, but I wasn't really putting a calendar to it, because we see so many times that it happens months down the road, right? That we see a dip in another consolidation range. So really, the things that I'm looking for are the same as I've always been looking for. I'm looking for that. I'm looking for that liquidity to appear in the order book that makes me feel like, hey, we got enough to get that big move in either direction, which doesn't exist right now. We have deep liquidity in terms of like how deep it's laddered in both directions, but we don't have that, solid big concentration like we like to see when we get those bigger moves. And with the speculative nature of not knowing what the inflation data is going to be in, I look to the charts because the charts don't lie, right? So I identify some ranges that I think are important to watch, and then I piece all of these things together to try and form my narrative at the moment. But if all the pieces of the puzzle aren't lined up, in my opinion, it's not happening yet. And right now, it ain't happening yet.
Mark, what about you?
I can answer more generally. So I do think, I do feel like there's got to be a bearish catalyst of some sort.
Why am I not surprised you'd say this?
Yeah. I mean, this is my character for the trading calls.
Okay, wait. Since you're in character for your trading calls, here's what I want to get for the next call, because I like the Ray-Bans. I want you to keep rocking the Ray-Bans, but I want you to get like a flight simulator, so it looks like you're flying a plane as you're talking through us.
I'll see if I can get a cockpit or something for my virtual background.
You're flying to the next crypto event in Dubai.
Yeah, no, there are I am paying attention to things like how long the yield curve has been inverted. I also have been paying attention to the amount of insider selling, and like Tesla, for example, is a big enough company that it could move. It could precipitate a global recession if it wanted to. And the uh, uh, in terms of like just thinking about like Tesla Motors for a moment, the head of like Tesla Motors is like I think just recently sold something like $50 million worth of Tesla stock, which is already down. She sold it like at a local bottom. Like the people inside that company don't seem to be signaling that they have much faith in the value of their company at present. And this is at the same time where Elon Musk is petitioning for like a $56 billion bonus in Tesla stock, which is the only reason to do that is to is to sell it, and he's got like a 5-year cliff and that kind of thing. But yeah, like so I'm paying attention to all of these kind of things, and it's not just Tesla. We're actually in an unprecedented time for insider selling, and I don't mean insider selling in the sense that people are doing something nefarious. Like it's not insider trading. I'm not referring to the crime. I'm just pointing out that of the people that hold enormous amounts of their own stock, they are signaling that they think it is massively overvalued with their choices by moving enormous amounts of that stock onto the market and converting it into cash.
And we've
This
seen
is
this
true of
happen like for months, though, right? Like Bezos did
months.
this months ago.
Bezos, Mark Zuckerberg, like all of the A-listers are basically liquidating their stock, and you
So,
have to
Mark, you're
wonder.
saying you're waiting for this bearish catalyst. You're expecting a bearish catalyst. But
Yeah,
Keith, you're saying that
But
you're
you're
thinking
saying they're liquidating their stock. That they're selling portions of their stock. They still have massive holdings, right? They're taking some profit. So it's not
yeah,
like they're
sure,
getting out.
yeah, of course. It's not like they're not like they're not exiting from their position in the company necessarily, but it does seem to indicate that they think that their stock is overvalued, right? Like that's that's the litmus test.
does selling
Um,
necessarily mean they feel it's overvalued though, or could it be like Keith just said in terms of they're taking profit?
It's kind of the same. Well, maybe
Mm.
it's not always. Yeah, it's not necessarily. I'm not Chicken Little. I'm not saying that this is like the rats leaving the ship prematurely or something like that. But when you put it in a sort of a greater perspective, with things like the worsening tensions in the Middle East, although things are looking nice and calm there, like that could precipitate an oil shock, and that has brought about a global recession 100% of the time. That is without fail. Um, and with an inverted yield curve as long as the one that we've had, and generally the longer they last, the more long lasting and more brutal the recession that follows them, combined with historical amounts of insider selling. It's just there, like everything is set up for very deep. I'm not sure. I don't want to say long lasting, but everything is set up for a very deep recession. All of the right indicators have hit. It's like everyone's waiting for something to happen, something to go wrong, you know. Um, and it could be it never comes. But yeah, I do have this perspective, and me, like I'm not I'm generally not a pessimist. I am on these calls because I think I do like to sort of bring some of the like worst case scenario. I like to break groupthink and be offer the devil's advocate opinion. But yeah, just speaking, generally, it looks like the economy is not slowing down in the United States. Like from all other perspectives, the things are going very well. And so I think that if and and employment is actually down, like there's nothing to indicate that an economic recession is about to happen.
Well, we did get a
It's
bump up a couple weeks ago in the unemployment number, a tenth, and so it's still
yeah,
below 4. It's still below 4%. It's still very low. But those
it's still
incremental
low. Yeah.
bumps, but an incremental bump
I-
like that is exactly what helped trigger that rally a couple weekends ago when that was aligned. We had that number on Thursday, and then I think Friday was like was Grayscale's like first day of inflows for the ETF.
Yeah, right. And so, yeah, it could be that nothing, like, I'm not too concerned about the US economic numbers, to be honest. Like Keith said, like, we got a slight bump up, but on a grander perspective, unemployment is historically low, uncharacteristically low. It's looking pretty good. But, there are these just like do you ever get that weird feeling that something isn't right? That's how I feel right now. And it could be that it's May, and May just makes traders feel this way. But we'll wait and see.
Well, I have a new take. I have a new take on May go away,
Yeah,
which
have a
is
new
like to
take.
hear it.
May provide some good buying opportunities.
Well, this is the other
Um,
thing. I wanted Crypto Courier to comment on this, because you know how his dashboard has a has an analysis about like the trend in value during like certain parts of the month, right? And we know that up until we know that May is generally not very good. We know that April is generally one of the best, and so on and so forth. It would be interesting to look at what expected returns are had you bought during those months, like bought anything,
Right.
bought Bitcoin, bought ETH, bought Tesla stock. Because most people see those trends and they think, oh, like, this is going to be a bearish period. I'm going to wait for, the Christmas boom before I start buying again. When actually, the opposite is true, right? The booms are when you should be selling your stuff, and these deep capitulations should be when you are looking to go shopping. And we have seen the stock market take a pullback. It has broken out of a long-term uptrending channel and come back to retest it. That's generally a pretty good time to take let's say a well-structured and educated position on some of the stocks that you would like to purchase, because it looks like it's going to continue rallying higher. But I still have this weird, like, icky feeling that things are overheated, and I'm just not
Mark,
sure what to do about it.
can you guys see Mike's? We got a comment here from Mike Robb. First of all, hi Mike. Thanks for tuning in and for commenting here. Can you guys see? I've added it to the screen.
Yeah, I see it.
Berkshire
Yeah.
Capital.
Mm-hmm. So he's kind of saying, same thing. Warren sold 20 billion, yet only bought 3 billion in the last quarter alone.
Yeah, they are.
So what he's saying is
representing-
Mark is as smart as Warren Buffett.
At least Mark sees what they're doing.
Yeah,
Funny.
and like,
All right.
it's
Go ahead,
like,
Mark. You have another comment, and then I want to jump into Keith's analysis
so just
here, if we can.
wanted to reiterate, like, it's not, I'm not calling for a cataclysm or something like that. I'm just saying that I would expect, and with without some, there is a silver lining to it, right? Which is, these are the kinds of opportunities that I actually look forward to. When I've heard Keith say it before, when there's blood in the streets, you should be buying. And if that kind of prospect excites you, you may not have to wait for too long. I guess my advice is always the same. And to turn a phrase from Keith, keep some dry powder is, I think, what I'm driving at. This isn't a time to get super excited. As I'll always tell you, it's never a time to get super excited. But yeah, I do think that we will have better buying opportunities in the future, and it looks like all of these billionaires agree with me.
Okay. On that, Keith, do you mind sharing your screen? Because Mike has another comment here, and I think this is relevant to, what we're going to be seeing in the order book.
In terms of liquidity.
Mm-hmm.
Yeah, so he asked
isn't
if
the liquidity still top heavy? Isn't it still much larger, up at 70K than down at
and it is exactly. So let's go ahead and switch over. Let me share a screen, and we can take a look at that. And it's been that way for a while, right? It's been that way since we were up at 70. I think, what's the high? 73, 800. And
Yeah.
so we definitely have a large concentration of liquidity to the upside. Here's a narrower range here. I was talking about these guardrails earlier that we often see come into play around Fed speak and economic numbers, just to kind of, I don't know, put some plunge protection and some upside protection on the range, keeping things in this range here as we navigate through these numbers. The market really doesn't want, this tells me that somebody doesn't want to see things go haywire. They don't want to see a massive dump, and they don't want to see a massive pump until the market finds its footing here. And that's fine, right? This is still a wide enough range to make money in. And what I would say is I would be cautious. I'm always cautious of new liquidity when it appears, especially when it's choreographed like this, because chances are next week this isn't here, right? And if it is, then we can reevaluate at that point. But I think this is here really just to kind of keep the market corralled in this range for the time being. In terms of what Mike was talking about, if we zoom out, we can see that we have to the upside much more liquidity laddered than we do on the downside, right? So there's
Let's say
more.
you're looking at 3 years.
I'm
Keith,
looking at
I'm sorry.
I'm looking at 3 years here, and I could take this in narrower for sure. Right, we can see it. We can see pretty good concentrations of it here, right? Even up to 80K. But let's just focus on what's really in our scope at the moment. And even that high side is beyond this, right? That's already over a month old where that local high is right now. But yeah, definitely more to the upside than there is to the downside. And if I add some contrast here, you can see a little bit more, right? We're top heavy for sure. And
That is so pretty.
But this has been, you like that?
I do.
It's the color of fire. No,
I love it.
Now you know
I'm
how
sorry,
I
I didn't
named
mean to
it.
cut you off, but like just the way that you can kind of zoom in on that and really, build that contrast. It makes it so clear what you're looking at.
Well, this is actually a pretty important feature that we added into this version of fire charts, because especially when you get into low liquidity order books, or even if there's high volume, if there's a lot of liquidity in the book, but it's all relatively the same amount at each level, then there's no contrast. And you'll see that in a lot of alts, low liquidity coins, where it's hard to see. So this helps us boost that, so we can see we can see where liquidity is and where it isn't. And by filtering out the low liquidity, we can see what are really the most important areas on the chart, right? And so that's what I've done here. I've just taken out some of the low and some of the high. So yes, there's definitely more to the upside. And you can see, if I take this out further, you can see how it has managed to actually fade a bit over the last couple of months, because we had, let me put it all back so we can go to the benchmark here and see what, here's how we're scaled. Highest part of the chart was down here, and that was over 100 million. That was 106 million. That's up here, right? And so we had higher concentrations of volume previously back in March and April, and now that we're in May, a lot of this has come down into the market. A lot of it's been dropped down into the market. So this area is thinning out, actually, right? So look at this, right? This is the big ladder right overhead, and this is much of this has come from above. And so yes, this is hard to pass, right? Before we even talk about this, right? Before we talk about serious bull market and all-time highs and price discovery, we got to get through this. We have to reclaim that 69K level, right? That was the all-time high for so long, right? And we had so much trouble clearing that level up here, right? Rejection after rejection. And so not to get ahead of myself here, but these are now, this is what I'm looking at in conjunction with the liquidity in the order book, because to me, what we're seeing here does not show, we have a lot of depth to this side as well, right? But it's not concentrated. In other words, these market participants are prepared to buy. They're not sure where price is going to bottom, and they're prepared to buy at any of these levels. Just as the upside, most people think that price is going to move back above 70K, so that, that's why this wall exists up here. And this right now is just a matter of the range. Maybe these guys are trying to push price down. Do these guys really want to get filled, or are they just trying to push price down to get those bids filled lower and retest support? This all remains to be seen, right? And we can see these, when these larger blocks of liquidity show up, 100 million, 60 million, 90 million, whatever they are, they show up in an instant, right? And then, or we'll see maybe 50 or 60 million show up, and then more will accumulate into that range. And then we start to see some front running, and then that's when we start to get the moves, right? So what I see here is a recipe for more chop until we get that bright spot on one side or the other that's going to push things in either direction. And we get them, right? We had one recently, and it pushed price down. Okay. And so, here's where it was. Here's where we had bid support, and it made for a nice run, but it was not enough to really serve as the foundation to really ignite the move on the bull market. So this is what I continue to watch for, and this is, to me, a key element, a key piece of the puzzle. Of course, looking at the order flow as well, also very important. And you can see here, like over this period of time, right? The accumulation really started around.
For a minute, we were talking about how there was no accumulation.
Right. Well,
there was no chop like this. There was no ranging. There was no, and now, like, does it surprise you that we were seeing it, and then now we moved up a little bit, but we're seeing it all over again? Like, this doesn't come as a surprise. You guys,
nothing really comes as a surprise here. Actually, we had, buying began pretty robustly, around around December, right? Christmas time was really when things got hot. And of course, there was all the ETF speculation through January. The ETF got approved. We had that little dump off of that, and then price really began to appreciate. Right, we bottomed out here, and price. This was the ETF approval right here. It was a local top at the time. Price bottomed out because Grayscale was selling so hot and heavy, and then boom, off to the races. Right. Well, the fact that we made these moves, look at this, never retested, right? So it's a reasonable assumption that we could go retest there, and look at that, 50 to 52K.
Yeah.
And look at what we see here on the charts, right? This was a prior consolidation level, and this was a prior consolidation level ahead of that never got retested. Let me clear out the trend precognition and make it a little bit, clean up the chart just a little bit. I know I have a lot of stuff on the chart, but I have things to share. And so we're, this pattern here would be called a falling wedge, and a falling wedge is historically a bullish pattern, but they don't always play out. And, this attempted to validate, and then it attempted to invalidate. And for me, I'm looking at key levels. You hear me talk about the 21 moving average a lot. And to me, it comes into play here on both the daily and the weekly chart. And I'm going to show you why that's important. Last night, I did a tweet, or an X. I don't even know what the fuck we're supposed to call it anymore.
I think they're still called tweets.
I posted on Elon's platform. And at the moment, the daily candle was above, after the close, the daily candle opened above the 21-day moving average. And I said, this is the first candle that's had a chance to live above the 21-day moving average in literally over a month, right? Hasn't been since the beginning of April, since we've been up there. So of course it invalidated overnight, right? We dropped down as I kind of expected it to, because we had all this economic data, and we also always, tend to see whale games around these, Fed speeches and economic reports. So there's that. And then there's the bottom side, right? This is the breakout fake out zone. And for me to really validate a breakout, sure, we got to get over the 21, we got to get over the 50-day. But really for me, it's this 2021 top, 69K. That's the level that we need to print full candle bodies above before we can talk about going back to the all-time high and really making a move into price discovery for the future, right? All of this uncharted territory. And so, I always like to look at the upside possibilities and the downside possibilities, because that's how you mitigate risk. So on the downside, obviously we have this lower low here at 56.5. And now we have, if we go to the weekly chart, the 21-week moving average, which is always an important one to me, has now moved up to above that local low. If we test this, first of all, I think we need a retest of support before we can actually have a real real sustainable move up.
And support,
Secondly,
you're looking at what, 56, or you're looking down at 50?
No, I'm looking right here where this green 21 moving average is. This is the 21 week, and now it is just above where that lower low is, right? So if we get a retest here and it holds, that's a big if, right? If it holds,
Yeah.
it serves two purposes. It gives, number one, it gives us that retest of support that can help validate that this is indeed a bottom. And number two, it would create a higher low. And we need to start seeing a series of higher lows to build that next leg up. So
Keith, really quickly, we're talking higher highs and lower lows and things of the sort, right? But for anybody that can't see the chart, who's following and like watching the call, the numbers, just so that they have that sort of number.
Okay,
in
so
mind,
the numbers change when moving averages. The numbers change over time, right? But
right.
As it sits right now, our lower low is at 56,500. And the 21-week moving average is currently at 56,900 and change. So it's just above that. It's just above that lower low.
Yeah.
And then I look at that 21-day moving average on the top side to, there's a lot between here and that 69K level. But that 21-day moving average is what, around 62.5-ish, maybe just below 62.5. So here, let me see exactly where that is. I got so much going on here.
Well, you do that. I'm going to welcome Crypto Corio to the call.
Hey Corio, it's at 62.3.
Hey guys.
So those are the really local levels that I'm watching. The downside is more of a macro to me. If we lose it, then I think we're going into that potentially into that 50 to 52K range, and then to the upside, we've got a lot of hurdles to get to this 69K level. And of course, Fire Charts tells me the story, right? Here's where's the liquidity, and we got a lot overhead to get through. So I need to see a big bright spot somewhere down here to make me think that with confidence that we're going there.
I'm actually okay. So Corio will sometimes share his charts with us, right? Remember there was that one day where it was like the last 3 cycles, I think is what it was, I can't help but think of that when I think about how we continue to say we're expecting this to go back and retest for another accumulation phase. Corio, when you look at the last 3 cycles, right? What are you showing? Are you expecting the same sort of retest at that range there?
When you say retest, do you mean retest of support or
okay, so maybe it was right before you had joined. Keith was saying, Keith, what was that at, like 40-ish?
No. So
prior to.
So our current local low is at 56.5. Prior to this, we have a consolidation range. If we lose this level up here, I think we go to this 50 to 52K range, which, and if that doesn't hold, then down here to the 44, 45. But there's currently no sentiment that I'm seeing, at least not in terms of liquidity, to go sub 50K at the moment. That could change. Nothing changes sentiment like price moving in that direction. But at the moment, there's just not much sentiment for that.
Yeah, so in terms of what actually we can see from other cycles, let me share my screen and we can go over the charts following up with Keith's charts. So let's go actually on the pair that has some
Keith,
good
by the way,
history.
thank you so much.
Oh, always a pleasure.
Go ahead, Corio. Sorry about that.
Sure. So let's go on the weekly. So as we've said, let me put this on logarithmic. Where is this?
And while you were gone, like before you joined, I shouldn't say while you were gone, before you were able to join, Mark was saying that he wanted to ask you a question about your charts also. So we'll get to that after.
Sure. So generally speaking, what we observe is that prior to halvings, we see a consolidation period of multiple months where the volatility is really low, and either we have some kind of rally pre-halving, which actually happened this cycle, but very aggressively, unlike other cycles where it was just kind of a small rally, or there is. So usually that's the pattern that we see. Let me remove that. The pattern that we see is some kind of like something like, okay, we have the halving, and then for a few months, nothing much happens, and then things start to go up. This is in 2020. We had, I don't recall exactly the date of the halving, but we had, I mean, 2020 was particular because of the crash of COVID, but halving was somewhere around here, I would say, Q2 2020, and then there were some consolidation here from May, June, July, some retest, some breakout retest, and then going higher. And then in 2016, we see this small, move up, this consolidation, again, breakout retest, small move up, and then the aggressive bull market. This is usually the pattern that we see. Now, for some reason, the sentiment on Twitter shifts very quickly, and I'm seeing some very bearish comments. Even today, I saw someone said that the top is already in. They were wondering if the top is in. So I mean, we never know, but at least historically, there hasn't been any kind of break of the 4-year cycle, which to me, people ask me if, a lot of people again are talking about these super cycles, and things maybe might have changed with the institutions coming, but I don't really think that there is kind of any invalidation of the 4-year cycles. At least as of now, there isn't any data, and obviously because we have short-term memory as humans. We are just zoomed on what's happening here in the last weeks. But if you zoom out on this chart, and if I remove everything, this is like nothing. Like look at this and compare this to other kind of price action of the history of the Bitcoin. This is not even something that you would notice actually. So people are bearish now. They say the top is in, or they fear more downside. But if you look at the price of Bitcoin, there is there has been a lot of, I mean, the worst is obviously behind us in terms of all these bear markets, and now the question is, okay, are we just patient enough to have to endure these consolidation periods where not much are happening? We had multiple examples of this. After kind of bearish patterns, we always have this kind of consolidation. So now,
you just said a very important word, Corio.
which one?
Is the market patient enough? And
exactly.
And that is exactly what leads to people getting shaken out. And that's what these periods are for, right? The market is trying to shake out weak hands.
Absolutely. I think we can talk about two kinds of capitulation. We have price capitulation, which we usually see, near the end of the bear market, after these candles or these big red candles, people lose a lot of money or are afraid. And so this is the price capitulation. And we also have some thing, which is the time capitulation, which is people, at some point they're, they had these dreams that they will become a millionaire overnight, buying some alts. And they probably didn't buy the bottom, and so they become impatient after some times where nothing is happening, and then they sell their coins or whatever, and this is time capitulation. And both of these capitulations lead to new rallies. That's and by the way, this capitulation can be also seen on chain in the kind of on-chain data activity, volumes on dexes, etc. If you look at the low that we had in October 2023, we could see easily that the activity on chain was at the lowest possible. The gas fees on Ethereum, we could do transactions on Ethereum for almost sub $1. All these kind of
When was that?
signals
Last
in
year?
September,
Wow.
September 2023. I mean, very low numbers.
Yeah.
But yeah. So I mean, I'm not really worried, as I agree with Keith, as we never know what will happen, but as of now, I don't see anything happening that will bring us below the 50K range. And and even if we draw some Fibonacci's here, which I really like Fibonacci's, even like this is 2557, like okay, 50 382 level, which is a kind of standard pullback, would be at 50K, even if that happens. So um, as I said, I think more of anything, we will have some kind of time capitulation. We know historically that Q2 and Q3 are kind of bearish or low volatility environments. Data confirms that. We can see that actually on my narrative dashboard. I think if you
This
go
is what I
here,
meant earlier, crypto, by the way, or Corio, when I said Mark had a question for you on your charts. It was about your dashboard, so I'm glad you're bringing it up here.
yeah, sure. We can now talk about them. Let me just go over that specific one. Yeah, this is the one. So if I remove this mean, so what we can see here is that historically, we have this is data since 2017 on more than 200 like large mid cap alts. We can see that historically we have very bullish Q1, kind of bullish Q4 as well, and then Q2. Especially May, June is kind of bearish, and the same thing for August and September. So this is we are here. We are in this range where historically not the most bullish price action. We know that now there are more concerns about the economy. From one side, we know that it can get much worse. I mean, from what we had maybe in the last 2 years. On the other side, we know that the thing is not yet solved. So this is yet another confirmation for me. So for some kind of time capitulation that would happen in the next month, but without too much changes in price, I would say. But other than that, I would just address Mark's question. But if you look at narratives and all the performance of the alts, everything has been very bad lately. So in the last 7 days, everything is down -8%. In May, everything is in May -1%. But even now, actually, why is the sentiment so bearish? Because many alts have now a negative performance across the year. So if you look at some of the I tweeted about that today, but some of these alts have had really bad performances of 50-60%. Like this is Tao. If you look at some there are some even worse cases here, like this is Deem, 70% drawdown, and this is from February. So it's almost 3 months now, and people are start to become impatient. Not only be impatient, but also people are probably down here. Maybe they don't have a lot of stables going to buy these dips, and Tia Celestia is also another project that people were talking a lot about, and this is down 60%, and all these projects are not in a really good situation. So yeah, so I think it's time to be patient and wait for market to go higher. But yeah, so happy to address questions that Mark has.
Yeah, it had to do with the returns on narrative by month,
Mm-hmm.
and a couple of the other ones. It was so because it says like narratives, returns on narratives performance for that month. Does this assume like what does it compare it to? Like return compared to what?
So this is the USD returns of the different tokens that constitute each narrative. So
Right.
compared
And
to
so
so here is MTD, so compared to the beginning of the month. So here is 1st of May, and if it's
right.
YTD is beginning of the year.
Yeah. So because what I was saying before you joined the call is some of the big the biggest insiders in the world are all sort of offloading some of their company stock, and we
Mm-hmm.
could speculate that they're going to buy it back, and that's not an outlandish proposal. This is generally how these things go, right? Company executives sell off their stock when they think it's overvalued, and they buy it back when they think it's undervalued. The performance charts that you're measuring here, I had wondered if if we took like a very bearish like a very bearish month, like April, you know,
Hmm.
or like, sorry, not like April, like May or September.
Yeah.
And then, you know, instead of evaluating it over the performance for the rest of that month, to take it out a little bit later, right? To like basically try and evaluate what is the best month to buy stuff. Because I imagine that it's going to be during these capitulation periods where, like in December, or not December necessarily, I think December was pretty break even, but like November, and things, like they look really good, and people like to see these big positive
Hmm.
these big positive bars, and they think, wow, like I can't wait for November. But I'm
Hmm.
wondering, maybe they should be like, I can't wait for September, right? November is when you should be exiting, you know what I mean? Like, and it would be
Absolutely.
interesting, to see, but you know, it's subjective because you need to choose the performance period over which you evaluate it.
This is exactly what I was saying at the beginning when I said may go away is really May is find find a dip to
May,
buy.
Absolutely.
May go away means you bought in April.
So I think just to answer your question, this chart has all the answers. This is obviously an average, but I think it's now 7 years of data, so it's I think valuable enough to draw some conclusions. What this chart is telling us is that you buy in September because you had multiple months of bearish price actions, but then historically after September it turns bullish. You buy in September and you sell in April. March, April. This is what this is telling us. So if you're into mean reversion, this is exactly what you should be doing. Just just be patient here. There will be some very bearish price actions here during summer and September, and then things usually pick up in Q4. This is also true for stock markets. If you look at the returns of stock
Right.
markets, Q4 is the most bullish kind of quarter, and Q1 is also bullish. So absolutely, this is the truth. Now, following up, maybe I can actually share some. I talked about the sentiment. I can share actually briefly a new dashboard that I have developed. I mean, we talked about the narrative trends on social media last week based on forecaster data, but I actually developed today. Actually, I released this new dashboard, which is called Fear and Greed Index. I think
Oh,
most people are
nice.
most people are familiar with this Fear and Greed Index, this one, which is here. You know,
How is it
um,
evaluated, by the way? Like, do you know
this is
how is fear and greed actually measured?
so this one here they show here the methodology. So they have different components. Volatility is 25, like one quarter. They look at social media, but I don't know exactly which social media. They don't mention. They do surveys, and they look at the market momentum volume, and so they combine all these parameters and then they come up with this thing. So this is nice, but the problem is that it's lagging. Most of the time it doesn't react very fast. I've actually studied this. I mean, there is some alpha into it, but if you look, but for long term. But for example, if you look at like February, like March, we were at peak euphoria, and can be seen here. But since then, it hasn't changed a lot. Although in April, price action was very negative, was kind of bearish. We still were in that 70 to 80 range, which is not really a good, doesn't actually correspond to the truth that you could see in terms of a sentiment index. So I've developed this new one. This is based on forecasted data. Remember last week we discussed forecasters, decentralized social media, and which has the advantage of being able to query the data easily. And so this is now a fear and greed index, kind of a new one. And now, Farcaster is pretty new in terms of having some kind of enough users so that you can extract some kind of valuable information from it. So we don't have a lot of history from this index or any kind of data from forecaster, but now there is some real organic activity from users, and they're regularly writing stuff, so we can actually extract some information here. Some of the, for example, something that you could see here is that when we had on April, like the first week of April, where we were near 73K, that's where of course, that's where, based on this index at least, we had peak euphoria, and you could see that actually this reached level, 100. That was the maximum, level that it reached, and then that was the top, and then quickly after that, sentiment started to shift, and then you could see that there is some lagging between the price sometimes and the sentiment that you could see, but you could see also some kind of pattern here in March, and then some kind of pattern similar to this here, and then you can see that quickly as price goes up, sentiment picks up, etc. So there could be a really nice mean reversion kind of strategy that could be implemented just based on the social media posts on forecaster, and I'm eager to see how this develops as we get more data, and hopefully forecaster gets more adoption. But there is no doubt for me that there is a lot of alpha in looking into this kind of stuff, because some people are just focusing on sentiment trading, meaning that they don't look at the charts, they look at what other people are saying. Now, either they are contrarian and they, if the most people are buying, they would sell, etc., or they follow the trend. But there is real information, because especially as we know, crypto specifically more than any kind of market is influenced a lot by crypto Twitter. Like it was, I think, yesterday that when I woke up, I had all these pullback alerts that were triggered, and I didn't know what happened. And then I look on crypto Twitter, and it turned out that Kobe, the famous influencer, had some kind of had a tweet that some people interpreted as bearish, and that caused some kind of kind of sell off. So there is a lot of
That's all it takes.
yeah, that's all it takes. I mean, it's a big account, but still, we have seen a lot of these cases where few bearish posts from crypto Twitter can influence a lot, because most market participants are actively on Twitter.
Well, I think the stock market put circuit breakers on GameStop today because of a tweet.
Oh, really?
Yeah,
Was that
Okay.
today? I thought that
Yeah.
happened yesterday. Maybe I made that up.
I thought I saw a headline come across today. I just saw it coming across the channel. I didn't read the article, but I saw it may have happened yesterday. I saw um, an interview with Jay Clayton, who's a former SEC chair, talking about it this morning, and it's just the double standard is ridiculous, But that's a whole nother topic. Something I did want to ask you about, Corio, and this is also a different topic, is Mark was talking about the fact that some of these CEOs of big mega tech companies, and even Warren Buffett have divested quite a bit here over the last several months in anticipation of a bigger breakdown on the stock market and the economy, as it may contribute to that. Do you think that at any point, crypto has been pretty well correlated with the stock market here through the year? Do you think that we see a decoupling at some point? Or do you think now that we have so much ETF influence that we're going to stay correlated?
I mean, as of now, I don't see any kind of catalyst that would, in the short term, decouple us. Usually, when these decouples happen, when we have some very specific crypto catalyst. These were actually ETFs in Q4 last year. For example, these kind of things that are very specific to crypto. If you look at market tops and market bottoms, for example, the November 2021 market top, these things, and even actually the bottom that we had in Q2 2022, these things are highly correlated with the market, with the stock market, the macro conditions, etc. So if stock markets are heavily going down, I don't see anything now stopping crypto from from decorrelating it as of now, unless now all of a sudden a new banks or a huge hedge fund comes and they say, okay, now we are investing trillions in crypto. I think we will be affected.
Well, we do know that more are going to come online in terms of ETFs. We hear that happening around the world. And we know that there's some large institutions who are going through the due diligence process here in the U.S. that anticipate adding Bitcoin ETFs to their portfolios. So that part of the narrative, I think, is still intact. How much of an impact it has remains to be seen.
Did BlackRock
It-
just give a deadline for the ETH ETF? Did you guys see that?
I didn't
not.
follow with that, but I just saw a tweet that someone was saying that there is almost 100% chance that ETFs will pass in the next month. So
And I
yeah,
saw
I
just
think.
the opposite.
Oh, really?
I saw just the opposite probably a week or so ago from, if I'm pronouncing his name correctly, Eric Bakelnis, who's with Bloomberg, who really seems to have his thumb on the pulse of the ETF scene. He's had shared a lot of great insight and perspective about the ETFs, but he felt like it was not likely that the ETH ETF would get approved this year. That said, Gensler's coming under more and more pressure since then. So who knows?
Did you see that Van Eck as well has released a meme coin ETF?
Oh, really?
Yeah, consisting of Pepe, Dog with Hat, Floki, and Bonk, with Pepe being the lion's share of the fund.
What
Wow.
about
Keith, you look
goat and
impressed.
sheep?
You look like you're going through some serious FOMO right now.
I'm not. You know what? I'm amazed. It shows you that the stock market is willing to throw fundamentals out the door for profits, right? And this is what Jay Clayton was saying this morning, was that this is not akin to trading and investing. This is gambling. When that's what the funds are, that's a gamble. Can't say I disagree with that. We obviously have some metrics that say money's being made right here, but
Mhm.
in 10 or 20 years, is Floki or Pepe still going to be? And will there be anything? Will they become something?
It'll be the world currency, Keith.
Right. All right. If
I
it
mean,
becomes
Tesla
if it becomes the world currency, then I'm hoping that by then Bancor can pay us in Pepes to do these live streams every week.
I mean, at some point it was discussed that Tesla might accept Doge as payment. As we know, Elon Musk is big on Doge and meme coins. So, if he decides that he wants, to accept Dogecoin, then this would certainly open the door for other kind of.
By the way, you know that probably 90+% of the market only reads the headlines and never reads those stories, right? And they heard that that Tesla's accepting Doge, and Doge went up 18%. You can't buy a Tesla with Doge, but you can buy Tesla merch with Doge. So you could get a nice hat or a T-shirt or a
That's
keychain
like
with
the
Doge.
fine print, Keith.
But you can't.
Nobody cares about the fine print.
But you can't buy the actual car.
Okay, guys, I would have to leave you because as I have another meeting in 1 minute, but it was nice talking to you and catch you up next week.
We'll see you guys next week.
Thanks for the insight, Corio. Always great to see the dashboard.
My pleasure. Thanks.
I need to call it as well, Jim.
Okay, well, maybe we'll do a dedicated call, you and I, Mark. And
Yeah,
for
Mark
the
has a
record,
fl-
I don't want
Mark-
everybody
Mark has his
reaching out
next
to me
flight.
now, Keith, thinking
What's
that
that?
I'm paying everybody for being on here.
Right.
So sorry, I hate to burst your
I'm gonna
bubble
start that
here,
rumor.
but these
I'm going to start
guys
that
all
rumor.
volunteer to be
They are
here
going
every
to
week with
be
me. So
they're going to be hitting you up to be a guest on here if And if they find
They're
out
gonna
that
hit you up, and you know what, Keith, you could come on here, and I hear you're doing it for free too. So it's like this like double-edged sword here, right? Bottom line, we enjoy getting up here every week.
we
We
do,
love to sit and BS,
I do.
get
And
all of
I
the
learn
different
something every week
perspectives.
on this show. So I no, I really do. I look forward to this every single Tuesday. I do. This is my favorite part of the week, without a doubt.
I love this call, and I love the fact that we continue to kind of build this audience who really seems to be taking from everything that you guys are sharing. So, like, for real, thank you guys, and thank you to all of the viewers as well. Mark, I know you got to jump. Keith, thank you. Thank you, everybody. We'll see you next Tuesday.
All right. Thanks. Have a great week, everybody.
See
Trade
you
safe.
guys.